What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Welcome back to another episode of the CPA Zone. Today, we have a special guest with us, Zack Driscoll from SegPro Solutions. SegPro Solutions is a cost segregation study. So today's topic, we're going to talk about cost segregation studies. We'll touch on how that's going to play into the new tax bill and 100% bonus depreciation coming back. So, Zack, I'm really glad you can join us. Do you want to tell the listeners a bit more about yourself and your background and maybe how you got into the cost seg world?
Yeah, for sure, Ryan. Thanks for having me on. But I guess just to rewind all the way back to when I was younger, I grew up. So my dad builds custom homes even to this day. And before that, he actually worked for a just like a auction buying company. So they'd go to auctions, buy homes, gut them, flip them, and just kind of move through them like that. So I remember just from a young age, they would just throw us an envelope of cash and send us to the auction and say, hey, like, go get some homes. And so I was always, from a young age, I was always involved in the construction side of things and being hands-on with properties, seeing the ins and outs, and so that kind of led me to have that passion for it. Fast forward, graduated college in statistics, nothing to do with cost segregation at all, and then just wound up kind of rekindling that construction side of it and marrying it with the tax law, and just have found a lot of passion behind helping investors save money, and also um, property owners to kind of see the difference between straight line appreciation and doing a cost seg study.
Yeah, definitely. That's awesome. I know we use that a lot with our tax planning clients. So we work a good bit primarily with real estate investors, and we also work with a lot of small business owners. We at the current time, a lot of our business owners, not 100%, but many of them are what I would call real estate adjacent. So they're the contractors, they're real estate agents, or if they're doing something else, a lot of those guys they'll own the property that their business operates on. So maybe they've got a factory of some sort that they're operating out of the business, so they have some sort of tie to real estate. So we've historically done a lot of tax planning around cost seg studies, especially for those that can qualify as a real estate professional. And then, as I'm sure you're probably aware, the short-term rental loophole works for others that can't qualify as a real estate professional. It's just,
Yeah, that's a big trendy one.
yeah, all they need is that material participation. But I think a lot of people they underestimate how much work it can really be to self-manage a short-term rental until they get in there and start trying. So that's one area we try to help them through and explain what hours count, how much time you're going to have to put in. By the way, if you're going for 100 hours and more than anyone else, you're going to have to prove the other people's time as well. So comes as a bit of surprise sometimes, but the benefits when it's done right, they really pay off.
Yeah.
Do you do a lot of work with short-term rental investors as well?
Yeah, yep. A lot of, I mean, social media has taken over like the Airbnb wave, and everyone kind of hears about it. They hear about using that against active income, and so they hop on board. And like you said, definitely need a strategic CPA group like yourselves to like help balance out making sure they can reach those goals financially, and getting those tax benefits. Small business owners too, that's cash. I mean, that's just such a good niche to be able to help out. They make a lot of money, they show a lot of money. They've got to be able to write those off. So it's
Yeah,
awesome.
yeah, definitely. And so, have you guys seen an uptick in referrals or inquiries, at least leads coming in since the new tax bill passed? I know we had quite a few people just they've been waiting to see. Now they're ready to go out there and start making moves.
Yeah, pretty much everyone that I talk to now has been like, I'm on the hunt for a property. I need to get something 2025
Yeah,
ASAP. And so that's been like, it's been good to hear that.
yeah,
Um, looking at the housing market and then hearing people vocalize things like that, I think it's trending in a really good direction. So
Yeah.
we'll see if people pull the trigger. I know there's like that 2.5 week January window from January 1st to the 19th where
Yeah.
you really get stuck with 40% bonus and it's
Yeah.
so
I've talked to a few people that had bought some properties. They weren't placed in service. Some were like late 2024, early 2025. And they're like, well, I'm not going to place it in service until after January 20th. So I'm good, right? And you actually had to buy it and place it in service. I guess January 20th is inauguration day. So I think it was like, I guess that's how they chose the date. It would have been much better if they just did it a bit cleaner and made it first. But
yeah, just retroactive for all.
yeah, I hate when they do stuff like
It's a real bummer.
that. Yeah.
Yeah, so I've seen a huge uptick. Believe it or not, I actually spend a lot of time on like Twitter and Reddit forums. I mean, people are exploding on Reddit forums like, "Hey,
Oh, nice.
I'm looking to buy. I'm looking to what do you think I should do to get this tax write-off or tax benefit?" So a lot of people are actively looking right now.
Yeah. Yeah, another thing that we've used it for before, I don't know if you've heard this term, but a lot of people refer to it as a lazy 1031 exchange. You use that where like they sell a property, it's too late to 1031, so you buy a new one, do the cost egg and use bonus depreciation and use those losses to offset the gains from the property you sold. As long as you get it done in the same tax year, it's a perfectly legit strategy.
Yeah, no, super beneficial. And on top of it, I mean, it kind of helps in some way. The 1031 is not going to lower your new basis, though. Yeah, a lot of people, it's the lazy 1031 works.
Yeah.
But
Yeah, I mean, I've personally used that type of strategy as well. I've sold things in the past, like my full time job's running my accounting firm, so I can't qualify as a real estate professional. I don't own any short term rentals, but I do invest in real estate and have been for several years now. So I've sold properties and then used the lazy 1031 just to kind of absorb those gains and defer them, push them back, get it all done in the same year. A couple of years ago, I was kind of changing my investment strategy, getting out of single family homes and going more to syndicated deals. And so as I sold off property, I'd reinvest. And at the time, the bonus depreciation was still at 100%. I think 1 year was, did one last, my final one was at 23. So it's still 80%. So they're doing the cost sake studies, pushing out the losses and absorbing all my gains. So I still haven't had to pay any tax on real estate yet.
that's killer. Yeah. Do you find that, I mean, what kind of pushed you to do the lazy man 1031 versus just doing?
Well, so for me, it was the change in strategy. I was getting out of the single family homes that I owned, which they had property managers, but it was still a bit more. Um, and just kind of running the numbers, thinking like, okay, if I want this to really pay off long term, here's how many homes I would need to have. And just doing the math, I was looking to get into larger deals, and so I went more of the limited partner route in a few transactions. So I've been investing that way for the last 4 years now, 4 to 5, 4.5 maybe. Recently interested in the last two have been assisted living facilities.
Oh, nice. Those
So
are
yeah, yeah, yeah. It's like so you have like the business itself, and then the real estate as well. So so far things are going well there. So that's been my latest little area of focus, I guess.
yeah. And you find that the benefits still pay off quite nicely, even though you're not a, real estate professional.
Yeah. Oh yeah. Yeah. I mean, there's still so much to do. If you plan it right, you could generate cash flow from real estate and not pay any tax on it. Like
No.
I'm not going to take any big losses to offset my business income, and at least not at this point when I'm still running the accounting firm full time. But generating that tax free cash flow is still a major benefit. I think a lot of people look past that and they think, oh, I can't qualify as a real estate professional. What's the point? There's still plenty of tax benefits when you kind of look at all the different ways where your real estate pays you and let that tax free income grow and compound over time. It starts to add up.
Yeah, no, it's a good point. I know a lot of people get fixated on short-term rental loophole or REP, real estate professional, and then they kind of don't realize that regardless of those two, it's still a really, really powerful tool.
Yeah, yeah, absolutely. So one thing I wanted to ask you about, just to kind of change gears a little bit, is the cost sake studies themselves in the quality. So there's all different types of cost segregation companies out there. If you go online and start looking, you'll be marketed to with all different types of studies, and just talk a bit about the quality of different studies and maybe help the listeners understand what's the best type of study, what's the IRS going to look for, what's going to hold up best if they ever come in and they scrutinize a study.
Yeah, no, those are really good questions. I've seen such a large uptick in the industry with a lot of new faces emerging into Costa. When I first started doing it, there was so many, like so few players, like very, very big firms that everyone's heard of, Yona and Mass and Specs and some of these bigger groups. CSA was where I cut my teeth. That's where I started working. If you've heard of Costa Authority, they rebranded actually. Um, so what I've seen the biggest shift in the industry is a push almost to lower cost, more automated, easier, quicker studies. And you get a lot of sacrifice from the engineering portion of it. I think the engineering side of a study is really the key. Um, and so I think when you're looking at cost segregation studies and you're shopping around, obviously a low price is nice to see, but you want to make sure it checks certain boxes with proper nomenclature, even in the report. That's a huge deal. And then obviously you want like an engineer to sign off on it. You want a site visit to happen. Doesn't always need to be in person, I would say. Virtual site visits, can be good. Depends on the property type, really. Because you get a lot of guys who won't want to go out and do an on-site visit because it'll save them money. But I think going out and doing the on-site visit would actually benefit and find more assets for the client. So it would have to go do it. Those are some of the smaller things I think that kind of make a big study or make a better study. Some other things on the accounting side, I think you got to look for a group that's going to fill out a 3115 correctly, 3115, and deliver that to the CPA. And then, the 481 adjustment and all those things, those just have to be buttoned up and really nice.
Yeah, yeah, I've seen those where you get a 3115, it's wrong. So I mean, we do the 3115 because a lot of costing firms don't do that at all. Many of them don't. They
Really?
don't touch it, which is fine. Because we know what to do. But then I've gotten them where they're wrong. It's like, well, this is a short-term rental. Why are you depreciating it over 27 and a half years? You're gonna have to fix that. I hope you didn't fax this into Ogden, Utah yet. That's where those 3115s end up going. But yeah, it is. It's important to have a company that really understands all the moving pieces. So they're providing the correct information to the taxpayer, the CPA, and everyone involved. So it really does become like a team effort.
Yeah. Yep. And I would say look for someone who's gonna, hold your hand through an audit if it happens. Audits aren't a bad thing, they're not abnormal, they happen, and someone who's willing to be by your side, step through it, support their study. That's a good sign.
Yeah, yeah, absolutely. Yeah, because anytime you have a large write-off like that, especially with like a 3115, the 41A adjustments can be pretty substantial. That's going to show up on your Schedule E. They're just going to see this big negative number. And the IRS computers sometimes flag that and want to come take a closer look. But if you have a good study in place, you've met all the requirements to deduct those losses, then you really have nothing to worry about. It's a pain in the neck regardless. Like no one wants to go through that because it sucks. It sucks going through an audit, but you can come out clean. We've successfully defended several audits with using costing studies. So, and
Right.
and when you have a costing study that comes up in an audit, having the engineering firm, the costing study firm, help out on some of the supporting the data in the report is huge. I mean, I would say it's mandatory. CPA's not. They're not going to be like they're not going to be able to answer the engineering based questions that come
Yeah.
up.
Yeah, I mean, I think one of the biggest questions that they ask when they first send out their IED or whatever is just how did you substantiate the land? And even that's just a big kickoff point for
Yeah.
if you get, kind of lower end or not sleazy, but lazy cost seg firm that's just going to give you 9% land allocation,
Yeah.
you're going to have a hard time substantiating
Yeah.
that.
Oh yeah. Yeah. Definitely. Yeah. So I'm wondering, have you like run into any, I don't know, I would call them like stories that are just, interesting or funny in your time doing cost seg studies? Have you ever gone out to do the site visits yourself and just see something that's kind of crazy? I know most real estate investors, they all have like that one property that's just things went haywire or crazy. It's like,
Oh yeah, I've definitely I've done my fair share of hoarder homes for sure. Where I walk in and I'm like, I don't even know what assets are in this building. I can't see anything. So I've had a couple of those. I've had some cool site visits. I went out to California and did like a vineyard, and that was good.
Oh, that's cool.
Yeah, it was a really cool one. I've dabbled with. Did a ski lodge up in Colorado. Just took it was the middle of winter too, so we took
Oh,
us
nice.
yeah we took a little the gondola up halfway up the mountain. That was a good one. I think they were running X Games or not the X Games, but one of the big like ski tournaments or snowboard big jump tournaments, and so they were running that, and those guys
Oh,
were
that's awesome. Yeah.
they're shredded.
Yeah, that'd be cool. Have you ever ever done a cost seg study for like a mobile home park?
Yeah,
One of those? I hear they get really good returns on those.
insane. It's
Crazy.
incredible. Yeah, I mean, and you think it's gonna be like suspicious, I guess, to file, and then you see like 70, 80%, and you're like, whoa, is this real?
Yeah, because all those land improvements are just like,
Yep. Land improvement. It's amazing. Yeah, we've done a couple of those. I mean, there's some but gas stations are unique. I mean, if they get more than 50% gross gross sales from fuel, then it's 15-year property. The whole building is, but
oh, okay. That's cool.
yeah,
I didn't realize that.
yeah.
I've
So
never
yeah,
never dealt with a gas station. That's interesting. So the whole building's 15-year property. Okay, cool.
yeah, yeah. If they
So you
well,
got
I
on
mean,
something. That's awesome.
it's cool because if they sell more than 50, if their gross receipts more than 50% of them come from fuel cells, then yeah, it's a 15-year property.
Gotcha. I
Yeah.
know this new tax bill, qualified manufacturing company is going to be eligible for like building. Oh,
Yeah, he's really pushing for some, stateside manufacturers to really.
yeah, yeah, absolutely. Yeah, I've had the conversation before about like a cost seg study with clients, and they think 100% bonus depreciation that they can write off the whole building. Then you tell them like, well, no, actually, you're gonna carve out land, and what's left of the building, you're probably gonna see, yeah, maybe 25 or 30% of that moved over into, for like your typical like residence. That's gonna get moved over into 5 or 15 year property. Then you can write that portion off, and that turns out amazingly well. I can't
Yeah,
imagine being able to write off like the whole building is going to be that's insane. I guess you've seen it with gas stations. So that's awesome.
it's incredible. Yeah, those are there's some interesting property types out there that really generate. Like I would point people to car washes, to data centers. Data centers are incredible. I mean, think about all the
Oh
like,
yeah,
it's crazy.
I'm in Northern Virginia, so they have data centers like right outside of DC. They're just running them through. There's several counties out here. They're just going up every. In fact, some of the local politicians are trying to stop new data centers from coming up because they don't want to. I guess they don't like them popping up over here. But yeah, it's crazy, man.
Yeah. So a lot of unique property types out there that you can get into without just the cookie cutter Airbnb type stuff.
Yeah, 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 exactly. I mean, the cookie cutter stuff works for a lot of people, and it's really good to know. But man, you get into some of these unique things, and it's just like you're in a whole new world sometimes. Like the
Oh,
first time I saw was the way work out mobile home parks, which makes sense. Like, oh yeah, okay, well yeah, these are land improvements. But before I had been involved in it, it never really dawned on me. Oh wow, yeah, that's actually very, very lucrative to this.
well, it's kind of like a unique funnel. It's like all the top dogs talk about it. All the big commercial investors, people get wind that they're doing cost seg, and so some of the smaller young guns want to replicate the tax strategy. So they're buying, the smaller homes, 200, 300, 400K cost basis. And they're like, I need a cost like this, which, can be beneficial. But when you put it on a scale of these big commercial investors, they're really ripping some huge deductions
Oh
from.
yeah, yeah, definitely. So for what you see now in terms of like pricing for a typical cost, say, like I usually tell people expect probably around 3 grand for like a $1 million single family home, or smaller properties. That's if they're going the short term rental route. If you're going larger, like eight to 16 unit apartment buildings, when you're getting up into the several millions, it's going to be higher. But would you say like that lower end, if you're looking at $1 million or less property, still probably in that about 3K range for like the full like good engineering based studies? That's still pretty high.
100%. Yeah, I'd say that stayed strong. If anything, it's kind of the Wild West with pricing.
Yeah,
Uh, it's kind of crazy. I think it's such a hush hush thing that like people don't talk about much. But I think that range is healthy, man. 2,500
yeah,
to 200, 3,500 for your single family duplex, maybe even triplex.
yeah,
Goes into there. I mean, it's good, really good pricing, really fair. I think if you go below that, you're kind of dabbling with lower quality.
yeah, yeah. That's like there's a ton of online tools you can use that for smaller properties, but like you said, you don't get that site visit necessarily, or sometimes you lose some of the quality. Not to say there aren't some people that can do it well, but just in general, it's not as good. And even like the IRS cost seg audit technique guide, they even have like a ranking for the different studies. And the very top is like the engineering based study with on-site visit, and they go all the way down to like rule of thumb, which I don't know why that's even in there as an acceptable method, because I've never seen a rule of thumb cost say work out where that you just kind of make up a percentage. Like,
Yeah, like
yeah, 10% is going to be 5 year property and 10 to 15 years.
crazy, man. Yeah, and I don't even think you can't even quote the ATG, the audit techniques guide in any.
No, you can't. It's
Yeah,
not.
right. Yeah,
Yeah, it's not an authoritative source.
yeah. That's such it is a good document. Though. I mean, we
But
even.
yeah, I totally agree, because it kind of gives you the insight as to like where the auditor is going to go, what things they're going to ask about or for. So it is definitely valuable information.
Oh yeah, our final report. I think there's 13.1. I know there's 13 points, but our final reports just go through each one, and it almost just walks their hands through their own audit. If the
Okay,
IRS,
awesome.
like,
Yeah. Well, a lot of agents probably appreciate that. They got a lot going on. They're understaffed. Probably like, oh yeah, this okay, awesome.
I know. I
All
think
those questions.
there's way less staff right now, so.
Yeah, yeah, good deal. So, you have any exciting projects coming up, or anything big going on for you in terms of the cost seg, or just anything in general?
Recently, for some reason, it's been a lot of self storage.
Oh,
So
really? Okay.
yeah, I've been doing a handful of self storage, and I actually just did a daycare, a $6 million daycare.
Oh,
Um,
nice.
Recently that finished up and surprisingly did really well. Those are, I mean, cost is pretty boring stuff. Like
Yeah.
when you get down to it, as far as exciting projects, I'm a big relationships guy in the industry. I really just like um rolling with. I don't, it kind of it's an interesting field to be in because a lot of cost seg guys go straight to the source and they go straight to the investors, and every investor thinks they need every tax deduction possible, or loophole, or whatever you want to call it possible. Accelerated depreciation. And a lot of CPAs, on the other hand, know the back end of the individual's taxes, and think that it wouldn't be able to help. And so, and in a lot of cases, it won't help. In a lot of cases, it will help.
Yeah.
So I kind of I try to play a good middle ground of going golfing, going out to lunch with CPAs, and really um, taking care of those relationships, and then also kind of bridging between that and the real estate investor side of things.
Yeah. Yeah, definitely. And then at some point, there's the diminishing returns. Like I've had clients come in, they went out and had multiple cost seg studies done. And when we were onboarding them, it's like, look, that first study was awesome because you were saving 35 to 37 cents on the dollar for the entire deduction. And then it starts getting lower. And like, now you get down and you're saving 12 cents on the dollar instead. Where if you did, instead of doing four this year, if you did one or two, and then the next year did the other two, it would have paid off a lot better in terms of tax savings. But they didn't really think ahead and plan it. So they didn't plan it anyway. It was just, someone advised them to do that. And then that person ended up telling them they can't prepare a return with a cost savings study. So then we
Yeah.
brought them in. It was like, okay. I mean, it's water under the bridge now. They're happy with everything. They still had a great outcome overall. So, it could have been better
Yeah.
tax savings. You don't really necessarily want to get to zero because that last little bit at 10, 12 cents on the dollar for federal taxes is just like,
Yeah. Be forward thinking, right? I mean,
yeah,
and that's what's crazy too, is in this industry, I see so many people like mad that they're not down to zero.
yeah, yeah,
I'm like, you're mad that you're not at zero, but you were 2 days ago, you were going to pay like $100,000. Like what?
yeah, yeah, exactly. I want to look at the dollar savings. Like you can get to zero sometimes, but
Yeah.
the things you're going to have to do is it's going to end up costing more money for smaller return.
Yeah. No, so that's exciting. That's coming up. We've got some conferences. I'm going to go to this one up in Salt Lake. Actually, I'm not sure how it's going to go. I've actually never been to it, but it's only EAs. It's not CPAs at all.
Oh, nice. Okay.
Um, yeah, we'll see how that goes.
Yeah. What's it called? Do you know?
It's slipping my mind. It's at the Grand American Hotel up in Salt Lake.
Okay. Awesome.
Yeah, I'll have to look it up.
All right. Good deal. I think we're coming up on time, but if there's anything else you want to kind of put out there for the listeners or let us know the best way to get in touch with you, if anyone looking for a cost seg, and we can put all your information in the show notes as well. That way it's out there and easy to find.
Yeah, no, I just appreciate you having me on. I like being in the industry because I think it's such a helpful tool. Not everyone knows about it. I think the awareness is growing. So, but yeah, to find me, just if you go on Twitter, I'm mostly on Twitter as the depreciation guy. And I just try to put out, hopefully, just free, good, useful information on there. I'll do breakdowns on, a lot of times I'll go do breakdowns on just Zillow properties I find so that people can actually just get a good gauge on, what the actual tax benefit is.
Yeah. Okay. Awesome. Yeah,
Yeah.
that sounds good. We'll drop that in the show notes as well.
Cool. Yeah.
All
That's, of
right. Well, I appreciate you coming on. It's been great, and we'll have to do it again sometime.
course. Thanks, man.
All right. Thank you. That's about it for today, everyone. Thanks again. If you enjoyed this episode, hit that like and subscribe button. Until next time, have a great day. One last thing before you go. We have put out a free ebook for our listeners. You can find a link to this in our show notes. It's called the Rental Real Estate Investor Tax Guide and covers all the basic tax-related information for real estate investors. We hope you like it. Again, go to the show notes to download your free copy. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulicegroup.com/contact. That's ThePulicegroup.com/contact.